Good afternoon, good morning, good evening, everyone. It is 9:41 a.m. Eastern Standard Time on this 23rd day of March 2021. Happy Tuesday. Looking at our cryptocurrencies here, Bitcoin has this nice strong, currently a nice strong bounce off of the daily Kijun-sen that is holding its support. We have a good, not quite 12 hours yet of the day, and on the daily candle, and we're little bit over half of the volume that was traded yesterday. Looking at the oscillators on the daily chart for Bitcoin, I mean, this is a strong support signal right here. When Bitcoin is in a bull market, the support or the oversold levels that exist are at 65 and 55. And so we're slightly below that value area, but it looks like it's turning up here. The composite index, likewise, showing pretty good move. We're neutral in the percent B. So this is, if we put the Bollinger Bands on the screen here, we should see some signs that the upper and lower bands are starting to constrict. They're pointing down lower, and we see prices really in the mid of those bands. And Bollinger Bands are a volatility indicator. And as we see price consolidate, we'll see the bands constrict. That is a very likely thing we'll see play out here. Taking a look at the weekly chart, we are still well above. I want to look at a re-entry on the daily for Bitcoin, but the weekly chart just looks not that great. It looks like it still looks overdone, like we're going to have to see a close around that $50,000 value area. We have not tested the Kijun-sen on the weekly chart since. I mean, if you want to use it, it would be the 4th of January, the week of the 4th of January, so the first week of the year. Maybe the last time we tested the Kijun-sen, because we are a pretty good distance away from the Kijun-sen still. I mean, if we look at where we're at, we're 50% above the Kijun-sen's value. That's really, really extended. And we're continuing to see the RSI point down lower here. I mean, we were trading in the 90s and the 80s, which, by the way, here's the other thing. When something's in a bull market, the RSI over bought levels, they shift. By the way, this stuff changed 15 years ago. The RSI levels that we use of 30 and 70, the default that are put out by software companies, those aren't used anymore. Those changed in around 2008 is when we changed to looking at this. So the overbought levels in a bull market are 80 and 90, and then 55 to 65 is the oversold. We are currently sitting at 70.3. If we get down to, I have to, for me, I really have to see this test lower before I want to start to add to it. Even though there are some bullish conditions, even though there are more entrants into the market as far as institutional money is concerned, that's the other thing that's kind of on my mind is how much money do we not see in the order books across all the exchanges is accumulating Bitcoin at certain percentage drops. We just don't see that very well. Zipping on over to Cardano. Really nice moves overall. I mean, Cardano is up quite a bit since the beginning of the year. If we take the open of the week of the 4th of January. Oh, sorry, that's first week of January, the open to where we currently are. I mean, that's a 464% move. You can't go wrong with that. We are trading. We've had weekly closes, the highest weekly closes it's ever had before. We've made new all-time highs. We are seeing the weekly chart really, really, really respect the Tenkan-sen as a support zone. And, I've pointed out in my articles that, looking at the 80 cent level, I think is still good. But I mean, if I was and I add to it every week. I dollar cost average into Cardano, so I buy a little bit every week, regardless of where it's at. But I do have some buy limit orders because I do a um, a four position trade management. So let's just say you have 1,000. Let's say you have $1,000 that you want to put into cryptocurrencies, but you don't want to buy at the highs. Okay, split it up into four. Four. So you're looking at 250. I mean, I don't have to write this, but some people you do have to. And then split that, take those four positions and put them below price. You know, define where you want your guaranteed entry. Define your guaranteed entry. That's what G entry. And then you want to define your best buy or sorry, best entry entry. That's what I call them. So you have guaranteed entry and then you have best entry. So your guaranteed entry is one that's almost kind of like early. And so what I like to do and I do this in my trading too, when I trade futures and foreign currencies, I do the same thing. So if I look at the Cardano's chart here, put the volume profile on, and I'm going to change this to, we're not logarithmic right now. That's good. I know here's the weekly Tenkan Sen. I would put buy stop 1 there. So this would be buy stop 1 at 1.03. This is a guaranteed entry. Let me make this a little smaller here. Go top and the left. And then I would put maybe just slightly below, but the best entry I would have at the weekly Tenkan Sen. Buy stop 2 at 0.80. We'll just say 0.81. Best entry. And then you would divide between that. You'd have 2 more orders in the middle. It's not very, I mean, this is a very simple way to divide your capital so you're not entering all it at one spot. Keeping trade capital open is something that isn't discussed a lot. And you have to think of it like your gunpowder. You have to keep some gunpowder dry. You have to keep ammo on the side. You need to keep money available to get in to the market. If you have $1,000, whether you have $100 or just $10, don't spend all of your available capital on one single entry just because you're afraid you're going to miss out on some gains. Okay, you will always miss out on gains. You'll always miss out on trade opportunities. But this way, you are at least guaranteeing you're getting in on a dip. And if you're lucky, you're going to get all of these entries and you're going to have a much better, I mean, if all 4 of these entries hit, your average entry is going to be right in here. It's going to be at 93.33, 0.9333, and that average entry will adjust, but that's what you should do. And well, not financial advice. That's just what I do. That's what I do. But yeah, that's how I like to separate these. And for Cardano, that's what I try to look for. The composite index on the weekly here looks like it's going to curl up and move higher. I mean, it certainly could, but we're still coming off of these highs in the RSI, and I think we need to see a weekly close that is near the 103 again, just like we saw back in the first second week of March that we had in Cardano. So actually, let's look at the daily chart real quick. Gosh, yeah, the daily chart. I The daily chart right here, this is the one thing that's making me go, huh, okay, we could see this pop up quite a bit. Yeah, this could break out higher. Really, from a daily chart perspective, your re-entry here, this is where if you get a close, re-enter long or add to position if daily close is greater than or equal to the Tenkan Sen. So that would be at one. We'll just 128.53, 129, whatever you want to call it. But could that happen? Yes. The RSI could crack above 55. And then the composite index, this is the one you want to look for if this occurs. If the red line crosses above both I call this the pinch. It's just something I call it. There's no real technical definition for it, but I call it the pinch. And the pinch is an event where the composite index crosses above both averages on a single period or single time frame. So in this case, it's the daily chart. If it crosses above both of them, and the fast and the slow average, the green and the yellow, when they're close together, I call that the pinch. That generally causes some pretty explosive moves. And because it's in a relatively neutral position, this is the exact kind of condition that Connie Brown explains as being being a catalyst for some of the bigger major moves, because there is some divergence here that is present, and this could point to some higher moves here in the very near future. So just watch out for that. But otherwise, that does it for me, folks. About 12 minutes long, this video, a little longer than usual. But you all have a great rest of your trade day. Have a great rest of your trade week. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe. Thank you.